But Mayuresh Joshi as well joins in. Mayuresh, hi, morning. We were just debating about as to how pharmaceuticals as a sector should be looked at and whether the negatives are in the price, or do you think the price target cuts from brokerages and the downgrades have just begun to start off?
Morning, Aisha. So I think it's a logical reasoning to downgrade earnings because FY18 largely will be muted for pharma companies, and we've been time and again saying that you probably need to look at numbers of pharma companies FY19 onwards. So unless somebody has a view of more than 2 to 3 years, a large part of this fiscal is going to go in remedial and remediation costs for most of the pharma companies where FDA issues have plagued their plants. Secondly, the pricing issues have been very, very evident in terms of how the top line has grown, and even the sales for key drugs, even in a limited competition era, I think has not really shored up revenues for pharma companies. Third, I think the logical conclusion of EPS downgrades and forward P multiple actually getting curtailed are an obvious sign because earnings are not expected to improve significantly, at least over the next 2 to 3 quarters. As FDA issues start getting resolved over the next few quarters, and as pricing pressures start getting alleviated because of new niche generics that these companies are probably embarking upon with the huge R&D spends on their balance sheets, I think that is going to take time. So logically, I think if one really does not have a view of 2 to 3 years, I think pharma companies might just give you these occasional spurts, but largely I think outperformance from pharma companies largely cannot be expected, at least for this fiscal.
Okay, almost.
Mayuresh Joshi, go by recommendations, or you would say that, look, it's a great company, but the price is bad?
So I would concur with Sandeep, Nikunj. To a large deal, I think valuations cannot be stretched beyond a point, and the environment that Jubilant works out of, I think the intense competition in the QSR space is expected to stay. Again, I think the management commentary in terms of rationalizing store additions so that the SSS growth probably looks much better over the next few quarters, amidst the entire scenario of probably not even increasing prices or the discounting factors probably continuing. I think it's a very tough space to be in. So yes, I think valuations definitely on the higher side, but trading play can be done in Jubilant FoodWorks. But yes, I think stretching the P beyond certain levels is not acceptable. So again, I think not a call that I like to take over a longer period of time.
A couple of other stocks which were, very active, and we've been talking about the prospects of Reliance Communications. Mayuresh, what else is looking good? Any stock ideas that you may be recommending to your clients right now?
So Aisha, at this point of time, any decline on a company called Techno Electric looks very, very interesting. Now, the two business segments that Techno Electric operates out of, the EPC business is asset light. Again, if you look at the high free cash flow yield that the EPC business generates and the order book that it is sitting on, along with the high margins that it generates, I think one of the best businesses in the country probably, at least on the EPC side, on the power infrastructure space. When you're talking about the wind side of the business, the PLFs for FY17 have been close to 21.5%, 22%. The management now expects two things to happen here. A, I think the PLF expected to increase to 26%, along with incentives received from TNERC for increasing tariffs. I think that will increase their overall utilization levels and return ratios. And B, I think the management is very, very hopeful in terms of selling off their wind assets over a longer period of time. So even if one takes these valuations at one time's enterprise value, you're probably looking at debt reduction happening in a significant way. Debt on a consolidated balance sheet almost 0.2 times, not significant, and with cash flows expected to improve from the EPC business, that debt reduction can be very, very evident. A large part of capex has been done, dividend yield of 1.5%, earnings growth expected in excess of 20%. I think ROEs, ROCs should sustain over 18% for the company for the greater part of the next 2 years. So Techno Electric on declines is something that I suggest long-term investors to look at in a staggered manner.
Okay, Techno Electric, that's a stock that is liked by Mayuresh Joshi. Well, let me very clearly, Mayuresh seems to be in Jubilant FoodWorks. This stock has been seeing some massive buying right now. Are you convinced as well, for the benefit of our viewers who are just tuning in, that the worst is already in the price, and from now on, from the previous quarter, you're going to see a stock improvement and a consistent improvement in the same store sales growth?
Once again, that's been the huge overhang for the stock because the SSS growth has been very, very lumpy. And as I mentioned earlier, I think the QSR space is a very tough space to be in. Competitive intensity pressures, the discounting factors, the unorganized part of the business is pretty large as well. So I think to consistently outgrow the market and to consistently show the performance on the SSS side as well as the margin side, I think it's going to be a very difficult proposition in a business environment that's extremely lumpy at this point of time. So as I mentioned earlier, again, I think the valuations probably looking stretched. Can you stretch these valuations forward at target prices much higher from the current levels? I think the numbers have to do the talking. So unless the numbers are justified in Q2, Q3, I think a re-rating for the stock becomes difficult. So as I mentioned earlier as well, I think the trading momentum can very well be there for stocks like a Jubilant Foodwork. But to make a compelling long-term play, I think the consistency in numbers has to be evident. And that again, I think the Q2, Q3 print will probably let us know. But again, I think the print so far over the past few years have been very, very uneven for a stock like Jubilant Foodworks. So valuations, yes, stay on the higher side for a stock like Jubilant.
Okay, Mayuresh, great speaking with you. Thanks so much for taking the time out and joining it today on the show.
Thank you so much.
That's a positive take on Jubilant Foodworks, which is now holding up by 5.5%. 1441 is where the stock is right now.